Good afternoon, everyone. It is the 20th of September 2024, and it's been a pretty hectic week with one thing and another between the Fed and some big moves in the market. So let's have a look at the charts and see what it's telling us. So in the SPY, we had a gap down today, which was kind of expected. Yesterday was a very volatile upwards day. We made all-time highs, all-time closing highs. Today we pulled back, and we kept above the week-to-date anchor, which was good to see. That's where I found support. We're still above a rising 5-day moving average. We're above a 20 and 50 and 200-day rising moving average on the daily time frame. So even though this is a bit of a pullback, creates a higher low, and hopefully we continue on to all-time highs. At the end of the day, we just have to look at that 5-day moving average is continuing to rise, and it will do over the next few days unless we get more profit taking. But I would say your important level of interest right now is this 564ish level. It's where you probably want to be getting a little bit more concerned when it breaks this 5-day moving average down into this area and maybe down if it gets trapped under that. That's probably where you would want to show some concern. But generally, it's above a rising 5-day moving average and all other moving averages, so we're good. The Qs, nice bit of pullback today. Again, gap down, but found buyers close to the week to date volume weighted average price. If we put an anchor from yesterday's on it, we held below that today, which is not any form of concern. But we've created a higher low here, so I think all we need to do now is potentially make a higher high and carry on up into this level. If we maybe we'll see some further pullback here over the start of next week. It'd be nice to see it pull back, kind of consolidate around this 5-day moving average area. Um, we're above a rising 20-day moving average now, which is nice to see on the longer term time frame. 50-day moving average will continue to decline, and that's maybe what I'm kind of alluding to here is maybe that 50-day moving average will cause the stock to kind of pull back and then consolidate around this area and then push for a higher move up. That would uh, that would be a nice way to run further into all-time highs or up to all-time highs. Semiconductors are a little bit more concerning. They held above the 5-day moving average today, which was good to see. So this is clearly an important level around this 236-ish mark. Held above that 5-day moving average has a decline in 50 and 20-day moving average. 20 days starting to flatten here as we start to get rid of this data in the next few days. 50 will continue to decline. Not overly concerned as it's still above the 5-day moving average, and as we get rid of this data, the 5-day moving average will start to rise over the next few days. So maybe this is a nice higher low and we see a move to a higher high. We'll have a look at NVDA here shortly and just verify what's going on there because that seems to be the driving. The XBI took a little bit more profit taking today, traded under the volume weighted average price. Let me just get rid of some of these drawings to help clear things up a little bit. So we came close to that breakout yesterday. It's pulled back and it's consolidating in here, which is fine. I would like to see it maybe pull back this month to date volume weighted average price. That way it can pull back. 5-day moving average starts to decline, builds. 5-day moving average starts to rise. Then I can get involved with a full size position before we kind of move up into this area of band of resistance, potentially up into to this breakout area here. That would be the ideal high probability, low risk setup. But that's how I see the biotechs. I wouldn't mind seeing them pull back a little further, so keep a close eye on those. 5-day moving average will continue to rise over the next little bit. If it stays in this area, it's going to flatten, and then it will rise, and then it will flatten. So the next 3 or 4 days in the biotechs will may, unless we get a rally in a significant direction, which kind of points to a shorter term trend in a certain direction. That's just keeping on that 5-day moving average is going to be the key. Russell traded under the volume weighted average price for the day. It's had a nice run here. It needs a pullback. It needs to consolidate. I wouldn't mind seeing it pull back to the 20-day moving average here and then carry on upwards. Um, won't go up onto all-time highs, but hopefully we can then get up past this 228 area. We're likely to find a lot of buyers, but I would say, excuse me, the level of interest is we're probably right on it in this kind of band right here. That's probably where I would anticipate we're going to be finding some supply that will be released every time it comes down to this area. So if it breaks through here, breaks the 5-day moving average, maybe we see a pullback to that 215 mark, which is again perfectly coincides with that comment around the 20-day moving average. Energy names had a kind of gap down overnight. which was anticipated, primarily because we already have a declining 50 and 20-day moving average. 5-day moving averages continue to rise, so if it starts to break down below that, I think that's your key to get out. Just know where your stops are. Financials consolidated today, bit of a sideways day after that run yesterday, and yeah, again, know where your stop is if you're involved. Hopefully this continues up. This is a higher low, and it continues on to make a higher high. If it breaks the 5-day moving average, well, I think it's time just to be a little cautious about it and just know where your stops are and wait until it resets back up again. There's no point in holding losers for absolutely no reason. Bonds, again, gap down. Well, they never really gap down. It was another kind of sideways consolidation day. We're below a 5-day moving average. We're below the anchor from the recent peak, and we're now below a month-to-date volume-weighted average price. Still above it. Well, we're holding on the 20-day moving average, and we're rising. We got a rising 50-day moving average. So, I would say bonds need a little bit of time to kind of rebuild here. Not one that I would be looking to buy at right now. Let's have a quick look at NVDA. NVIDIA has a declining 5-day moving average on the shorter term time frame. It also has a declining 50 and 20-day moving average on the daily time frame. Now, if I'm looking at NVIDIA, my initial thoughts are NVIDIA lead the semiconductors, which have been leading the turning points for the market for the most part for earlier this year, for majority of the year, I should say. Now, if we get stuck under this 5-day moving average, and the 5-day moving average starts to continue down like this, which it might not because it will start to flatten here over the next few days, but if we get a bit of a sell-off in the morning and we stay below kind of this area of 116, then the 5-day moving average will start to decline, and there is a potential chance that we're going to get stuck under it for the short-term time. Now, the other thing that could also happen is we could excuse me, we could we could get a bust out of this on Monday morning with the excitement of a new week. Nvidia kind of comes up and we get going here like this, right? Maybe it's like that. Maybe it's not quite. That would allow then 5-day moving average to start to rise, and then as it decides to make a higher high above a flat to rising 5-day moving average, you could look to buy on strength as it breaks out of this consolidation zone if Nvidia is going to make a bigger move here. Now, if we look at Nvidia on the daily time frame, we are potentially got a head, a shoulder, sorry, a shoulder, a head, and a shoulder. And this would be potentially the top of the shoulder. We've made a higher low. Now, can this go on to make a higher high if it breaks out of the consolidation zone? Just putting it on your radar. If you if you own the trade, then make the trade your own, as they say. Own the trade, own the outcome, I think is what I was trying to say. And so if we look at Tesla, we talked about this yesterday. It did pull back this morning. Oops. It did pull back into this area this morning, but it never gained. It never got back above the volume weighted average price for the day. We put an anchor from yesterday. We're also traded below that. So to get involved on this one on Monday morning, I wouldn't get involved right away. I always say wait 15 minutes before you get involved in the market. If it hasn't gapped up, I would say you probably want to wait for it to. Well, you want to see a higher high above a flat to rise 5-day moving average. We've already got a rising 5-day moving average here. So maybe if we see a little bit more consolidation here in the morning, that will allow the 2-day volume weighted average price, which is the blue line, come up, and that will also allow that 2-day VWAP, which is today's 2-day VWAP, kind of go at the same time. And then we've got the daily VWAP, which would be from here, would be like this, and I would be a buy above all three VWAPs on strength as it breaks above this 240 mark, potentially onto all-time highs. Well, not all-time high, sorry, but you've got potentially to run up to this 270 mark. I would have thought is probably where it's going. You'll have a rising 50-day moving average. If you start to get up into this 265 area, you already have a rising 20-day moving average. I think there's a good opportunity this one could run. It's got room to run up to that kind of 270-ish mark. So anyway, that's how I would play to get involved in this one. I would wait for the volume weighted average prices to align and then buy on strength once it gets above that. I would definitely make sure that they are all above each other in the corresponding order. So you want the daily VWAP below above the 2 day and then the 2 day above the 3 day. But if you kind of get a consolidation of them in all in one area, I think you're probably safe to buy it above the volume weighted average price for the day. Worst case not, probably go under there. You could probably have a little bit closer if you want to, but you want to give it some room because it is a bit of a volatile stock. And I think that is really it for Friday. I hope everyone has a great weekend and had a good week's trading.